Welcome back, everyone, and congratulations, you've made it to the end of the Stock Market Basics course. Today, we're going over Section 8, which is the final section called Preparing for Your Investing Journey. And this is the last time you're going to have to hear me say this. We are not your financial advisors. We're not here to give you specific investment advice or recommendations, and any company that we do talk about is to be taken as educational and illustrative purposes only. I never lose. Either I win or I learn. And here's what we're going to cover today in this section: your routine for finding stocks, monitoring your watch list, and how to create a trade journal. You've made it to the final section, and I hope you've learned a lot so far. With the information you've learned up to this point, you should be ready to start investing with confidence. In this section, you're going to learn where to find some timely ideas. You got a head start in the last section by creating a watch list that's made up of companies that you're familiar with. You may be able to act on some of those companies now if they pass the criteria that you learned in Section 5, Intro to Fundamental Analysis. However, if they don't meet that criteria, you need to wait until it does. In this section, we're going to show you some ways to find potential ideas that may be actionable now. We're going to start off by watching the insiders. The first thing you can do is look at the companies on your watch list and see if there are any recent insider transactions, specifically buy transactions. Insider buying is when a company executive, such as the CEO, directors, or officers, acquire shares of the company they work for. These are the higher ups within an organization, and they have more knowledge of what's going on, good or bad, within the company. They have access to key company information before it becomes public knowledge, and this knowledge can be very valuable to us as investors. Therefore, if they are buying shares, it could mean that good things are about to happen within the company. When they start to allocate their own money into the company stock, we should pay attention. Due to their exclusive information on company information, the SEC pays close attention to these transactions. The SEC, also known as the Securities and Exchange Commission, requires that these insiders file reports on their transactions, giving the average investor the opportunity to have the same insights into insider buying or selling activity. And this levels a playing field for the rest of us, since these reports are public information. The form they're required to file is called the SEC Form 4, and you can find this information on the SEC's website. You can also find it on almost any other financial site, such as Yahoo Finance, MSN Money, Morningstar, and many others. High insider ownership typically signals confidence in a company's future. If one or two execs are buying a small number of shares, then this signal isn't good or bad. But here is where we find it very powerful. When we see clusters of activity by several insiders buying shares over a short time period, this means there's a sign of consensus opinion amongst those who are running the company. And another powerful indicator is when you see large transactions. This is obviously more meaningful than when we see a small amount of shares being purchased. Insider buying is very valuable information. However, it's not a guaranteed buy signal. You still need to do your own research and make sure it fits our fundamental analysis criteria. Tracking insiders gives us some potential ideas for finding stocks that are ready to move sooner than later. You just need to confirm that this is a stock worthy of owning based on the quality that we look for in a potential investment. Next thing we look for is institutional ownership. Another advantage we have, and a really good way to find stocks that are poised to move, is to look at what the big institutional money managers are buying right now. These are the guys and gals on Wall Street that are managing billions of dollars. They're hedge fund managers, pension plans, and mutual fund managers. Similar to company insiders, the SEC makes certain money managers file forms if they're going to buy or sell a stock. They must file a Form 13D within 10 days if they intend on buying or selling more than 5% of a company stock. They must file a Form 13F every quarter if they're managing more than $100 million in assets under management. These forms are also public information. Wouldn't it be great if we can get inside the minds of Warren Buffett, Joel Greenblatt, and the other successful and wealthy investors on Wall Street? Well, these public forums allow us to do just that. Who needs a team of analysts and researchers when we can just take advantage of their team? The small investor wins. Piggybacking off the smartest investors on Wall Street gives us another very big advantage. Some of my biggest winners have come from following or copying what other investors are doing. If you see that several hedge funds, pension plans, mutual fund managers are all buying the same company within the same time period, that could mean that this is something we should look into as well. There are plenty of free resources to find this information. Just Google 13F and 13D filings or go to the SEC website. A resource that I use, it's worth 1,000 times more than the cost of the subscription, which is $80 a quarter, is Hedge Fund Wisdom. They track the quarterly transactions from 25 of the top hedge fund managers on Wall Street, including Warren Buffett. This newsletter compiles the quarterly SEC filings for us and shows us what the big guys and gals are buying as a new position or if they're adding to an existing position. And then it also shows us who is reducing an existing position or if those hedge fund managers are completely exiting out of a stock entirely. My favorite part about the newsletter is the consensus list. The consensus buy list highlights stocks that are being bought by multiple managers on the list in the same quarter. And the consensus sell list highlights stocks that are being sold by multiple managers on the list in the same quarter. If several of these managers are buying the same company in the same quarter around the same time period, then this could be an idea worth digging into. This is such a huge advantage for us, but like anything else, do not buy just because others are. Copying the hedge fund managers gives us some very timely ideas, but you still need to do your own research and apply what you've been taught so far. The next thing we want to use are stock screeners. Stock screeners are a great tool to find potential ideas. These are software programs that filter out stocks based on criteria we want to look for. This reduces the amount of time it takes to find companies to put on our watch list. Joel Greenblatt built a free screener at magicformulainvesting.com. This screener filters stocks based on two criteria that he talks about in his book, The Little Book That Beats the Market: return on capital and earnings yield. We talked about return on capital in section 5, and we cover earnings yield in the value investing and options trading course. This screener filters the companies based on a market cap that you select, and then it sorts out the companies that have the highest combined score of return on capital and earnings yield within the market cap that you selected. For example, assume I selected a minimum market cap of $500 million. This screener is going to take a look at any company that has 500 million market cap on up. XYZ and ABC are two companies within that market capitalization. XYZ has a return on capital of 21% and an earnings yield of 9%. So this screener is going to add the two together, and that's going to give us a combined score of 30. If ABC had an ROC of 18% and earnings yield of 11%, the screener would score ABC at 29. The screener would rank XYZ higher, meaning that it is a better company based on those two metrics. XYZ scored 30, whereas ABC scored 29. Does this screener really give us ideas that we can use? Well, I got the idea to buy EBIX from the screener, and I bought it at 15, and I bought it again when it fell to $12.50, and as of today, it's $81.25. So yeah, it works pretty well. Another resource is Morningstar. They have a very good screener to find potentially undervalued stocks. To find these stocks, you do have to have a premium subscription. I think it's about $100 or $125 a year. However, a lot of libraries have subscriptions to Morningstar. So check with your library, and if they have a subscription to Morningstar, you can access that information for free. Search for 4 or 5-star rated companies for investment ideas. Now, these are ratings based purely on valuation. The 4 and 5-star ratings are what Morningstar believes are the most undervalued companies. 4-star companies, based on Morningstar's valuations, are trading at a discount to fair value. And the 5-star rated companies are stocks that Morningstar believes to be the most undervalued stocks. These are trading at a deep discount. A lot of the companies that Morningstar believes are trading at a discount or a steep discount are cheap for a reason. They're crap, they're junk, they're garbage. However, some of these companies that are trading at a discount are gems, and we need to find those gems. If we find a company on here that's a solid, fundamentally sound business and is trading at a discount, then all we need to do now is wait for the technical analysis indicators to tell us when to get in. GuruFocus.com and ValueLine are two other resources that I use daily. GuruFocus has a membership fee, but you can get a 1-week free trial to see everything they have to offer. And you can search for stocks where there are both insiders and institutional investors buying the same stock. They have screeners for everything that we've talked about in Section 5 as well. Value Line also has a membership, but most libraries have a subscription to this service as well. So contact your library, and if they do have a subscription, you can log in using your library card directly from your library's website for free. And this site has many of the screeners found in Guru Focus, and you can filter stocks based on everything taught in Section 5. Next, I want to talk more about the watch list. You learned about this in Section 7. A watch list is a list of stocks being monitored for potential trading or investing opportunities. You've already created this list from companies within industries where you have a particular interest or knowledge. And we want to monitor this list on a regular basis because your winners are going to come from this group of companies if purchased at the right time. As we mentioned already, some of these companies may be worth buying now, but most of them probably aren't ready just yet for the following reasons. One, they may not pass all of our qualifying criteria just yet. They might not be trading at a discount, or it might meet the qualifying criteria and be at a discount, but the indicators haven't turned positive yet. Here's how we're going to monitor this list. I want you to do the following things daily. For the companies that meet our criteria and it's at a discount, you need to pay attention to the charts every day for potential entry signals. This shouldn't take more than just a couple minutes each day. Watch for arrows turning green and look to see if it's bouncing off of support or breaking through resistance. You can also set up text alerts to notify you of these changes using the CNBC app, Yahoo Finance, Seeking Alpha, and many others. On a weekly basis, I want you to look for more companies to put on your list. Start by tracking the insiders and see if there are any significant buy transactions. And second, track the institutional fund managers. Go on the SEC website and search the 13F and or the 13D filings. Or you can use a resource such as Hedge Fund Wisdom. And next, use the stock screeners to search for companies that meet our criteria. So each month, you need to look at the news regarding companies on your watch list. Do any of these headlines stand out for good or bad reasons? Look for sectors in the market that are becoming favorable. Are you watching any companies on this list? If so, it may be getting close to buying time. And look for sectors that are now out of favor. Find the best company in that sector, put them on your watch list, and wait for the green arrows. And lastly, on a quarterly basis, you need to scan the quarterly reports for the companies on your watch list. These reports give us very important financial information that could affect the value of the company. It will also give us information on what's going on with the company currently and what to expect for the quarter and year going forward. The financials from this report will impact everything that you've learned in Section 5. We want these figures to remain positive and ideally growing each quarter. And remove the companies on your list that no longer meet our criteria. Lastly, creating a trade journal. As you get started, I promise that you are going to make mistakes. Don't let this discourage you. Let it encourage you instead. Because if you keep track of your mistakes, you're going to learn from them, and you won't make the same mistake again. In Section 1, you'll learn how to practice what you've learned by using fake money, also known as paper trading when you first start out. This is going to help you overcome many of the beginner obstacles associated with placing trades for the first time, researching a company, and everything else that goes into buying a stock. Once you're ready to put real money on the line, you're going to have another obstacle not associated with paper trading. And this obstacle is called your emotions. This is the biggest killer to portfolio returns if they're not in check. And it's a completely different ballgame when real money is on the line. Many investors let their emotions get the best of them, and this is where mistakes come into play. We're teaching you how to invest using facts, not emotions, but as you begin, you may still have that voice inside of your head that will talk you into making stupid decisions. Here's an idea that's going to help you overcome that. It's called a trade journal. When I first started out, my mentor told me to track every single transaction I made, whether it was a long-term stock investment or a short-term options trade. I did this and it really helped me identify mistakes that I was making. And I want you to get a notebook and do the same. It'll only take a few minutes each time you place a trade, but it'll be well worth it. When I decided to buy a stock, I would write down a brief sentence or two as to why I thought it made sense, including things such as my target price, why it was at a discount and why I thought it would go back up. I also included in there whether or not I got the technical confirmation, such as the arrows. Did I go through every item on my checklist? and you're going to have access to that checklist in the next course. If it didn't pass every item, why not? And why should I still buy it? And then I would try to talk myself out of buying it. If I tried to invert the story and it still made sense, then I felt confident buying the shares. I also wrote down in my journal the reason why I did a short-term trade. I had a process that I needed to follow and goals that I want to achieve on each trade, such as my monthly return. I want to earn between 3 to 4% each month. I need to be at least 11% away from the current stock price. And if this doesn't make sense to you right now, that's okay. We're going to cover this in great detail in the value investing and options trading course. I had to place a trade where my probability of success will be at least 90%. And the indicators must confirm the direction in which I place my trade. Start doing the same thing now. After a while, you're going to start to see a pattern. You'll notice that there's a process that you've been following each time you have a successful trade. And you're also going to notice what you're doing wrong on the trades that did not go your way. Pay close attention to the mistakes and use each losing trade as a lesson so you don't make that same mistake again. Some things that happen in the market are out of our control. Therefore, losses are always going to be a part of life as an investor and a trader. However, I noticed that a lot of my losses were preventable. Sometimes I bought a stock when there wasn't enough of a discount. Other times I bought before the indicators told me to get in. And on a few occasions I was just stupid and lazy and I didn't do the full analysis. Use your journal starting today. Minimize the mistakes that you can control. Repeat everything you did on the trades where you had winners, and good luck with your investing. Here's your learning activity for this section. Start tracking the insiders. This is my main source for potential investment ideas. My favorite and most productive resource is Hedge Fund Wisdom. And lastly, make it a habit to monitor your watch list by utilizing the daily, weekly, monthly, and quarterly to-do list items in this section. And with that, I want to say thank you. Thank you for taking the course. I hope you found it very informative. I hope you learned a lot. And please apply what you've learned and practice it every day. And keep in touch. I want to hear your success stories. As a way of saying thank you for taking our course, we want to extend a gift to you. Once you're done taking the course, you're entitled to a complimentary 1-hour coaching session with one of our coaches. To schedule your free coaching session, shoot me an email, tom@wallstreetvalue.com. And if you want some more education, we offer a couple different options. We have online courses on value investing, options trading, technical analysis, and retirement planning. And if you want a group setting, we offer live online classes. And finally, we also offer one-on-one coaching for those who need a little extra help with their investing or trading, or just want a more private learning experience. For our students enrolled in any of our courses, classes, or coaching, you're also going to receive access to our live weekly trade room where we analyze trades together. We do that once a week. We have our live weekly Q&A with our coaches. You're going to get live trade alerts anytime we make a buy or sell decision in our own account. You'll also have access to our private Facebook group and the wallstreetvalue.com community access. For more information on this, email me at tom@wallstreetvalue.com or click on the following link. Once again, I want to say thank you very much, and I hope to hear from you soon.